Hello traders, this is Rich Derrick from Tradesight. Wanted to take a few minutes here and go back and revisit the chart of the Japanese yen. Back in November, we had identified a breakout and really thought that this had merit to run quite a bit, and that there was considerable upside potential for the Japanese yen. Just to review, a couple things led us to that conclusion. First of which was that we had a very nice looking seeker exhaustion buy signal on the daily chart. We had our 1 through 9 setup phase, and then we proceeded on to the countdown phase, represented here by these red numbers, ultimately getting our 13 exhaustion right here at the swing low candle. After which the 13 was put in place, then we were looking for a breakout to buy, and on the day of the recording, I had noticed that we cleared this 80-50 area with some good distance and broke here above into this 81 area, which took out the prior highs here, really making good on this exhaustion buy signal. From there, we predicted that this would have a little bit of work to do as it was trying to get through a couple of levels, but there was still some room to the upside. So what I would like to do now is take a look at the current state of the Japanese yen and see how this developed, and also overlay our Tradesight Seeker tool to see what that's telling us now. Okay, so now what we want to do is we want to go forward in time using a really neat feature on the eSignal platform, which is the bar replay mode. So what we're going to do is we're going to activate that, and what it's going to do is it's going to focus on the near term bar, and we're going to see how the seeker count develops going forward to see if there's an exhaustion point given, and where that actually might be. So let's activate the tool here. So we're going to start rolling forward in time now to see how this trade develops. Now we're going bar by bar here. You can see that we're counting up as we're making progress to the upside. Making some good headway here. This is a bit of a consolidation here, going sideways, still basing above that breakout, still making progress to the upside here. There's a recycle, so we're still good. No exhaustion warning yet. We're up to 5 bars up, getting quite a bit higher here, deeper into the count. And you can see that we just hit level here at 88 and seem to be turning back down. But what I want to point out is that what we do have developing here as we go forward, 11, 12, 13. So let me go back and illustrate that 13 and show exactly how we got to our exhaustion 13. So here's the buy signal down in this area. Here, again, here's the buy signal that we initiated our interest in this trade with. Here's the breakout at 81 that got us involved. We did 9 bars to the upside here initially, which oftentimes is a pause. That's a momentum move. We paused and went laterally sideways here, just kind of basing around this 82 area. Then we started to move up again and got this second seeker setup phase, the 1 through 9. Again, that's a momentum move. And of course, then after the 9 is printed for the seeker setup phase, that's the green 9 right here, then we can begin looking for the exhaustion. Countdown phase is the exhaustion phase, and those are the red numbers 1 through 13. We drove up here, and now we have our 13 in place, and all the while off of this 13 exhaustion down around the 77 area, we're kept long this trade after getting that signal all the way up until this big 88 area. So let's take a look at the technicals and see what this has to offer us as far as what's going to be coming next. All right, so here's the chart again. Same time frame, the daily time frame. Let me slide this out, make it a little bit bigger for you to see. Here's our exhaustion buy. We just went over the bar count. Now what we've done is we've applied our Murray math levels to see, if we're at an important level. And in fact, we are. We've run up into this 8/8 level at 87.50 and really stalled there. We have our 13 exhaustion right on this candle here, which was the high water mark of the move. We had this break to the downside following that candle, but we're kind of arrested here, at least so far this morning. This morning there's a little bit of strength again in the yen versus the dollar, but again, this is just an inside candle inside the previous day. This actually makes a nice short setup. Reason being, we do have our exhaustion warning in place. We're now testing the 10 EMA. And the 10 EMA in the daily time frame, Tradesight uses as the tool that defines the short-term trend. So while we do have an exhaustion warning in place, right now it is still a warning. It'll become an exhaustion signal once we exceed and close below the 10 EMA. So again, once the 10 EMA is breached on a closing basis, that will activate the sell signal and get us very interested in playing aggressively on the short side. A couple key points here as far as money management goes. Now we do have our exhaustion in place. Well, what's your stop loss? Well, most Forex traders don't play in the daily time frame, obviously. It's a much smaller time frame. But for this signal, what we're looking for is a close below the 10 EMA to activate the short setup, and that will be active until we reach and close above this magenta line here. This is our stop loss level. This is called the risk level, and this will define the trade. If this is exceeded on a closing basis to the upside and then trades one tick higher on a subsequent candle, that will nullify the sell signal. So what we're looking for here is looking for a breakdown below the 10 EMA to activate the sell signal, and then we're going to be aggressive on the short side. And it's also a nice little point of interest here. It's amazing how creepy these technicals can be sometimes, that the risk level is also exactly the plus 2/8 level, which is the maximum threshold for being overbought. If you exceed the 2/8 level to the upside here, we're going to frame shift to the upside and start another leg up. But we don't see that coming right now. What we do see coming now is some sort of a retracement, and we're going to be ready for that to trade. As always, if you'd like to learn a little bit more about these, please feel free to drop into the Trading Lab, where you can interact with the analysts and ask them questions in real time. And of course, if you have any comments, please feel free to leave them below. And we appreciate you spending time with us here, and hope to talk to you again soon. Again, this is Rich Derrick from Tradesight.